Welcome, guys. Warm welcome to all of you. We're just getting set up. I will wait for a couple of minutes, then get started. We have a few people running late. Let me just share my screen. All right. How is everybody doing? Guys, feel free to ping on Q&A and chat if you have any specific questions that you want us to cover. It's quite an informal session. We should be going for about 45 minutes, including Q&A. So if you have any specific questions or anything that you want us to cover, things that are top of mind, just feel free to send it across. Okay, we'll start in 2 minutes from now. And folks who are joining us online, welcome to all of you. Get comfortable. As is customary, we wait for a couple of minutes and then we get started. All right, guys, let's get started. Very warm welcome to all of you. My name is Ryan. I'm the host of Upsides, which is brought to you by Interview Kickstart. Upsides is our weekly session, right? It's a session where we focus on topics that are currently topical. We talk to experts. The goal of the session is very simple, right? It is to help bring you insights that help you move up in your career, right? Very, very simple. The sessions usually are about 45 minutes, including Q&A. My camera's a bit blurred. Sorry about that. So these are sessions aimed at bringing you insights to help you move up in your career. They are on topical topics, or we speak to experts, typically from top tech companies. And we do this once a week, Wednesday evenings at this time. Now, today's session is a very interesting one. We picked up this topic based on feedback that we got from our listeners. Question that we are trying to answer today is there a rebound in tech hiring that is already underway? Obviously, critical question has implications for all of us in terms of opportunities, compensation, so on and so forth. So that's the topic we're going to explore today. In terms of the flow for today's session, we'll start with a very quick, maybe 1 minute introduction to who we are, Interview Kickstart, for those of you who don't know us. And then we'll deep dive into a bunch of slides. I have a bunch of data that I want to share to help us form a view of whether this is the case. If not, we'll try and build a very nuanced view of, is there a rebound? If it's happening, where is it happening? How do you take advantage of it? So on and so forth. And then, as is customary, we'll take about 15-20 minutes of Q&A. So this is how we are going to do the session. Try and first answer the question on, is there a rebound in place? If so, right, every rebound is unique. Where is that rebound currently happening? And given where it is happening, how do you take advantage of it? Okay. Interview Kickstart, we are a platform. We've been around for about 8 years. We focus on helping engineers and other software folks level up in their careers, either move to a better domain. In this case, it would be machine learning or data science, or move to a much better company. We do this by partnering with hiring managers, tech leads, directors of engineering, as well as technical recruiters at the top tech companies. We have a platform where we have about 300 such folks. We have a whole bunch of different courses. The courses typically fall into 2 areas: interview prep to help you move to a better company, or up-leveling, right? Which is helping you move into a much better domain. We've been around for the last 8 years. We work with about 17,000 engineers. Our courses vary anywhere between 3 months to 12 months, depending on what you take. The core capability that we have built is that we understand how tech works at all the top tech companies. Our premise is that the frontier of learning has now moved away from universities and towards top companies. The best and the brightest in tech are at Google, they're at Amazon, they're at Netflix, they're at OpenAI, they're at Anthropic, and all these other wonderful companies. Our goal is to democratize, digitize, and deliver the insights that are today present at the top tech companies, bring them out to everybody in the form of courses. And so most people who complete the course tend to move into one of these top companies, end up becoming much better engineers, and can take advantage, right, of this amazing opportunity that exists today for engineers. If you want to learn more about Interview Kickstart, please sign up for one of our webinars. You'll hear about all the various courses we do. They are switch up courses to help you move to a new domain, enable up courses to let you stay in your own domain, but get AI enabled, and then level up courses, which is for interview prep. With that quick introduction, let's get to today's session. Now, some context, right? Tech was on a tearaway growth path, maybe from 2000 onwards. Most of us have never really seen a correction in tech, not the way we saw it last year, right? While there might have been ups and downs, these were very localized and they were for very short periods of time. Last year, brought on by the change in the interest rate regime, as well as the Ukraine war, and coming out of the steep rise that we saw in COVID, we saw a massive correction in tech, right? Now, all of these three are critical reasons. So let's go into each of them just to build the context. In COVID, let's do it in reverse order. In COVID, tech grew like crazy. There was mass scale adoption of tech. Obviously, we were all locked in our own homes. And so the growth spurt in tech was massive, right? There were a bunch of business models that came up that were not sustainable. And this happened along with a zero interest rate regime. Now, in a zero interest rate regime, two things happen. Cash becomes extremely cheap. And because cash becomes extremely cheap, it goes after high returning assets. The highest returning assets were tech stocks. They went up. You were also seeing mass scale consumption, another reason for them to go up. But in parallel to that, the more financial happening was that when you have a 0% interest rate, or in many parts of the world and for a short period of time in the US also, flirting with a negative interest rate, you tend to value future earnings much more than current earnings. And you get rewarded for future earnings. And so there were a lot of investments made in revenue that would come much, much later, right? And so all of this was happening on the financial side as a result of COVID. Then came the Ukraine war. The Ukraine war was the last hair in many ways of the camel's back that drove up food inflation, gas-related inflation, right? Core inflation went up. When fuel prices go up, all prices go up because everything needs to be delivered. Delivery happens via fuel, in effect. And so inflation started rearing its head. In the beginning, one thought that this is short-term inflation. There are arguments of whether the Fed reacted too late. If they reacted, did they react too strong? Nonetheless, that's not an area for us in this discussion, but the Fed did react very aggressively and started raising rates very significantly. When the rates started going up, the paradigm completely switched. And in that switched paradigm, because of a very high interest rate regime, faster and higher than we've seen for a long time, the paradigm switched and we went back to a construct where the markets rewarded short-term earnings much more than long-term earnings. Money was no longer free. In fact, money was extremely expensive. And so we had a very fast correction. And so the pendulum swung completely the other way. The market now started rewarding tech companies for EBITDA. What are the fastest ways to drive short-term EBITDA? The fastest ways to drive short-term EBITDA are to reduce payroll and to reduce marketing costs. Whether you're a small company, whether you're a big company, right? Those are the fastest ways to bring back EBITDA. And so starting July, August last year, clearly September onwards, we saw a massive correction in terms of layoffs. And ever since then, the question has been, how long is this going to last? What is the extent of this? And much more importantly, today's question, when do we start seeing a rebound? So that is the context within which we are going to answer today's question. And so let's start with part one, right? Which is there a rebound happening? And where is it underway, right? So just to set context of what's happening today. Tech prices, stock prices corrected very significantly last year because of the change in paradigm. Towards the end of last year, you had the GPT moment, right? GPT-3. In January or early this year, you had GPT-4 come out, right? 3.5 and then 4. That seemed to be a turning point, right? We needed something to pull the pendulum back. And generative AI seems to have been that moment. And if you were to have invested in top tech company stocks this year, you would have made a killing. The NASDAQ composite itself has gone up by 30% in the first half of the year. You take a company like NVIDIA, it's gone up more than 100%. Meta also gone up more than 100%, right? Google, Microsoft, Amazon, all gone up very significantly. And then that starts pointing to the fact now that, hey, the winds are indeed changing. And the reason I brought about stock prices is because the stock market is usually slightly ahead of Main Street, right? And so they price in the future at every point of time, right? That's the efficient market construct. And so if you go with the efficient market hypothesis, when you see stock prices rising, it means that the real market is likely to pick up because the stock market discounts future earnings to today's stock price. Now, if you look at stock prices, there is no one company where you are seeing a secular increase. It is across all the top companies. And the NASDAQ, which is a composite of largely tech companies, that has also gone up significantly. Now, so that gives us a hint that there is something that is well and truly underway. And that's been going on now for some time. Okay, so that's the first hint, right? As to the fact that something interesting is going on. We ourselves run surveys, which is Upside's episode 1 and 2, were the results of our quarterly survey with our mentors. We did a survey with about 108 mentors from Faang and non-Faang, almost equally split. And one of the key questions we asked our mentors, who are hiring managers, predominantly hiring managers, and so they're in the know. Our question was, are you seeing hiring coming back? And if so, when do you see it picking up? The overwhelming majority said, yes, we are seeing hiring coming back. 50% of them said that we see hiring coming back in 2023 to where it was earlier. And the remaining 50% said that they expect it to happen by the end of the year, start of next year. So our own data started pointing to the fact that hiring was well and truly underway. In Q4 of last year, this was not the case at all. In Q4 of last year, almost overwhelmingly, the responses that we got was that hiring is actually frozen, right? Anecdotal evidence, we partnered with one of the Faang companies last year where they sent us people who were failing their interviews and asked us to train them, right? Now, this is one of the largest Faang companies. They sent people who failed interviews to us. We trained them, we sent them back. They have started reaching out to all of those students again, indicating that there is some sort of rebound underway, right? So let's just look at the hints and try and piece this together. That's the second hint. The third is, for those of you who don't know, there is a very well-respected market analyst called Bernstein, Stanford Bernstein, right? They have been coming out with a layoffs report every month since September. They are probably the most legit source that tracked layoffs and what's going on, because they are in a position where they track stocks, right? And their recommendations move stocks. So they have very deep insight and they have strong vested interest in doing this. This is the data that has come from TrueUp, in line with what the Stanford Bernstein report was saying. Because if you look at the layoffs, right, they were high in Q4. They peaked in January, right, after the Christmas break. And then there was a sharp fall. But the sharp fall really kicked in the month of June, okay? In August, they have stopped reporting this now, and they have said that in our view, the tech recession is over. At the current rate, the August numbers will be around 10 to 11,000. Remember that even in boom times, there are layoffs, right? These layoffs are usually built on for performance, right? Performance reviews. So we are well below the levels that we saw in September. And the Bernstein report indicates that we are back to pre-recessionary levels, which is the stable level, right? And so that overall, guys, is where things are. There is a lot of data to indicate that something interesting is underway. I'll hold off on our own view till we come to the end, right? So that's the first question. Is there a rebound? There seems to be sufficient amount of data from different sources, including our own, which point to the fact that yes, something is underway. But the question is, where and how is it happening and playing out? Now, that is I'd say a more important question. And the reason that is a more important question is rebounds are never equal. They always start in some corners, right? And it takes time for it to be a secular rebound. So if indeed there is something interesting playing out, the far more relevant question is, where is it playing out and in what shape and form is it playing out? Again, going back to our own first party research, as part of our research for the recent Q2 Upside survey, we also asked our hiring managers and mentors, where are you seeing hiring? What are your teams hiring for? And this is a broad base of top companies. The data is that where you see on the screen here. On the left, the y-axis is in percentage, right? So it would mean that the way to read this would be 40% of people that we spoke to said they are hiring backend engineers. 33% of people said they're hiring machine learning engineers, so on and so forth. If you were to abstract this, you see a very interesting trend. And that is, there are two big areas, two big pockets of hiring where you are seeing very strong green shoots and a huge rebound, what's called a dead cat rebound, where you bounce and you bounce back up. And those tend to be AI and AI-oriented roles and core software-oriented roles. So AI-oriented roles would be machine learning, data science, data engineering, data analysts. We call that the data pack. That is in many ways the AI pack that is driving, right, this rebound. Core engineering is important because as the AI bandwagon gets space and you start productizing, rolling out AI in different products, you need core engineering to support that, right? And so the narrative that emerges from this is actually a very nuanced one, which is that the rebound is underway largely for AI and AI-oriented roles. And to support those roles, there is a rebound in core software roles as well. In terms of companies as well, you never see a rebound happening secularly across the board, or it's very, very rare. And today, because of the factors that are driving this rebound, you are seeing this rebound play out differently in different types of companies. The primary place where you're seeing this rebound is large tech, okay? And that is because they are extremely well capitalized and they have data, right? By the way, guys, I can see a lot of you are sending questions. Please feel free to keep those questions coming. We'll take those questions, we'll discuss them. And you can even raise your hand once we're done in the next 5-10 minutes. And we can discuss your Q&A, right? Very often discussion is much more fun because you can ask follow-up questions. But let me continue with the flow. So large companies seem to be very well placed to take advantage of the rebound. Also, they are uniquely powered by data. They have oodles of data. And in this, let's say, in this avatar, data becomes super critical, right? Every generation has had something that has been central to driving scale, right? In the early 2000s, it was desktop and desktop search. Then it became mobile, and the companies that benefited were what were called solo-mo companies, social, local, mobile companies. The next paradigm had cloud, right? Things like AWS. The current paradigm has data, right? Data, AI. While large companies are benefiting and rebounding, looks like quite significantly, startups are struggling. And more early stage startups, or let's say growth-oriented startups, right? Pre-IPO. And that is again because of the interest rate regime. In an interest rate regime where you have high interest rates and funds valuing short-term EBITDA, startups which historically built their models on a burn construct where they guzzle cash and potentially become profitable much later on, the greenback is not really excited by that anymore, right? And while there is a lot of talk about money coming back into startups, Our own discussion with the market, when we talk to folks on a regular basis, all the data points to the fact that that has not yet happened, right? So early stage, growth stage startups in a very challenging position. Many argue that we will never go back to the startup days of 2021, 22, where there was just a never-ending supply of money available. The exception to that norm is obviously AI startups. AI startups are doing incredibly well, right? Now, at some point of time, the floodgates for startups will open again, because there has been a lot of money that has been raised and has not yet been deployed with funds. So at some point of time, maybe later on this year, maybe next year, those floodgates will open again, but difficult to see them going back to where they were over 2019, 20, 21, a little bit of 2022, right? Within these companies, there is also a disparity, right? Now, very often people stop their thinking at a company level. What companies are hiring? That is a great first step. But the smart money or the smart folks realize that I need to look at orgs within companies to understand what's going on, especially large companies, because like Mark Zuckerberg says, most top companies are a collection of fast-growing startups, right? If you take Facebook, since we use that, they have Facebook, you have Insta, you have WhatsApp. Now you have the Llama initiatives, right? For those of you who aren't aware, Llama 2 are Facebook's open source LLM. Amazon has Amazon Pay, AWS, Marketplace, etc. Google has GCP, Search, YouTube. All top companies, Google Home, are a collection of many smaller companies, right? And those companies themselves are huge, right? If they were spun out, they would be several hundreds of billions, and they would be very large companies in and of their own right, right? YouTube, Insta are probably valued well over 100 billion. AirPods at Apple, supposedly valued at $1 billion, right? So you want to look at level 2 and level 3. What areas, which orgs in those companies are scaling? And within those orgs, what products, right? And our primary research points to the fact that the orgs that are rebounding are the ones that are leveraging AI, or that are central to the company's AI and AI-enabled strategy. And the AI-enabled word is quite an important word to keep in mind, and I'll explain that in the next section. Now, this is fairly obvious, right? Maybe the large company versus startups less obvious, but still fairly obvious, right? If you read a lot, you look at what's going on with the interest rate regime, the macro defines the micro. All of this is fairly obvious. A less obvious fact is that there is also an emerging very large opportunity outside big tech in the traditional Fortune 500 companies for engineers. And that is because AI is reshaping all industries. If I am somebody at JP Morgan or Caterpillar or Bank of America, right? Any Fortune 500 company, I actively am worried about how I can work in the AI paradigm, because I know that I cannot afford to pay the 900,000 Netflix job, which has now become the meme that represents this initiative. I can't do that. I can't afford to pay engineers that comp. But I want to be very competitive, because I know that if I don't do this, big tech will come and eat my lunch. And so there is an interesting opportunity. It's an emerging opportunity where many of these companies are looking and are paying fairly well for ML-oriented talent, right? So that is where the opportunity is playing out. Now, given what we are hearing about the green shoots and the rebound, given where these are coming at, let's get to the most important question. While this is all wonderful to know and academically interesting and great, dinner conversation, how does it make a difference to my life, right? And what do I need to do to benefit from it? And there the answer is relatively more straightforward. There are two distinct paths, right, that one can take. And there is one which I have not put on the screen here, which is the most obvious. And that is the most obvious one is, it's true of all markets. Move to a top company. You have a better quality of life, you have better work, and you have much better compensation. And you have ESOPs that are incredibly valuable, right? And that's how you build wealth. Let's set that aside because that doesn't change in any environment. What are the things you can do in today's environment? What you need to do always emanates from where there is demand. And not just where there is demand. Wealth is made where demand far outstrips supply. And that's happening around AI. You have two ways to play this. If you want to go all in, spend maybe 6 to 9 months reskilling or upskilling yourself, up-leveling yourself, then your best bet is to become a machine learning engineer or a data scientist, potentially a data engineer or a business analyst. Those are a little less remunerative. Your best bet is indeed to actually take the time. 6 months in an entire career is nothing, right? And learn what's called software 2.0, which is you become a machine learning engineer, you become a data scientist. The rewards there are surreal. There is a massive shortfall there. And these folks are going to be the central piece in the machine learning juggernaut. Actual core machine learning engineers. And because it's going to take you a little bit more time, 6, 9 months, the rewards are disproportionately higher. If you attended last session, we showed some data which points to the fact that at every level, the machine learning engineer ends up getting paid much more than the software engineer. And that gap actually increases over time. At an L7, that gap is about 800, it's about 300, 350,000. The difference between a MLE and a software engineer and a SWE suite, right? You also will move faster through the levels because there just is so much demand and little supply. But not everybody is in a position where they either want to or they are able to make a comprehensive switch, right? Many folks are interested in staying in their current roles. So many folks are interested in staying as backend engineers or staying as front-end engineers or staying in cybersecurity, whatever cloud, whatever area you are in. If that is your jam, then do enable yourself. Get AI enabled in your own domain. That is crucial because what is also underway right now is the remaking of software itself. Every session, I encourage people to go and read Software 2.0. It's an article by Andre Kapati on Medium. Software itself is being re-engineered, rewritten, right? And so if you want to survive in this paradigm, you must be AI enabled at the very least, right? What does AI enabled mean? And how is that different from switching? Switching means very crude, let me give you a very simple, crude paradigm. When you switch, you should be able to get to a point where you can build the LLMs, you can build the machine learning models, on top of which all the magic happens. When you get AI enabled, what it means is you can work with the APIs coming out of these black boxes. You can't build the black box, but you can build the layer of magic that happens on top of that. You know how to use the tools. You know how to use the APIs. You can work with ML. Now, why is AI enablement extremely important? Saying that switching to MLE is very obvious. I don't need to explain why that is very valuable. Getting AI enabled is very valuable because it's quicker. And because the orgs of the future are orgs where AI will play a central role, where ML will play a central role. And you should think about, therefore, what's happening in tech as a little bit of an arrow. The tip of the arrow being AI. And as you invest in AI and AI orgs, you will need supporting functions like backend, like full stack, like the traditional software. You will need those to support the MLEs. But all the supporting actors, right? The protagonist is the ML engineer. The cast supporting the ML engineer needs to be AI enabled to work in those areas. Now, even if you don't switch into actually going and becoming a machine learning engineer, it is very powerful to know the paradigms with which software of tomorrow is being written, right? And so if you want to know what to do, there are only two options: switch to MLE or get AI enabled. Switching, slightly longer time, disproportionately higher rewards. Being AI enabled, shorter time, also decent rewards, but far more importantly, if you don't do that, you're going to be out of a job very soon, right? So this is the way to play this trend. Now, let's summarize before we take Q&A. So what is our take, right? What do we believe? Is there a rebound in tech hiring? It's a nuanced answer. The nuanced answer is that yes, the recession in tech hiring is definitely over. That has abated. The start of the rebound is well and truly underway. The rebound is unequal. It's happening more in large companies, AI startups, AI orgs, with a potential opportunity in Fortune 500 large companies as well. AI is the prime actor, is the hero in this movie. The supporting cast is very valuable, but it is for those who are AI enabled. And so if you want to take advantage of this movie, you need to have AI skills in place. And that is how you take advantage of this rebound quite significantly. The jury is still out on what happens to early stage startups. It seems that the ones that have AI in them are the ones that are benefiting right now. A lot of what we are seeing is affected by larger forces that are at play, right? And so our view is that the rebound is underway. It's not happening equally, and it's driven by AI, right? With that, guys, I come to the end of the first part of today's session. Thank you very much for your time. I hope this was helpful. Please feel free to reach out with questions. I can already see a bunch of questions that are underway. Let me just keep a couple of slides up for reference, right? While we are chatting. Now, my co-founder Soham has joined me. We will be both taking questions. Like I said, two ways to ask questions. Just raise your hands if you want to chat. You want to ask a question verbally. Otherwise, we'll read out the questions that have come on Q&A. We'll go for about maybe 10 minutes, 15 minutes, and then we'll wrap this up. I will read out all questions because I know many of you have joined online, and so you may not be able to see the questions. Okay. The first question says, I am keen on an AI ML journey. How can this help non-US residents secure remote US jobs? Okay, so one of the things that that is happening is that AI and AI roles, AI and AI roles are the most in-demand tech roles globally, right? It's not just in one geography. There is data out there, and we actually have it on a slide, I didn't show it, which points to the fact that in every geography, AI and AI roles are very valuable. Since you're asking, for remote roles, large tech is hiring across the globe, right? And so they're hiring for AI orgs and for AI-enabled orgs across the globe. And so because the mothership is investing in AI, the satellite locations are also hiring for AI. And so just get AI and ML enabled, and those are the jobs that are being hired at all locations. The next question I'm going to hand over to Soham. Soham, the question is, how would a rebound affect potential negotiating strategies? I assume that question is, how does this affect negotiation strategies when somebody's looking for a role? Right? Given your expertise in this, you want to just take that question. Is there something unique that somebody should do vis-a-vis negotiation strategies given the rebound that we are seeing starting to take place?
No, nothing unique. I mean, just demand supply. So as the rebound continues to happen, there will be like there will be like fewer and fewer people for the role, and you'll likely get more offers and such. So just pretty straightforward. There's regular negotiation strategies. Nothing specific to this. Right now, the compensation is down about 25%. Hopefully, it'll come back up, and you just have to employ the same thing. You get multiple offers and negotiate it that way. That's the best way to negotiate. Really, and that's true. There's nothing with rebound really. That's true really anywhere, rebound or not.
Just to go one level deeper into that question, Soham, in this environment, are there areas or things that one can do that can help with getting more offers?
No, not really. You just have to like continue to push. If it took 2 months to find a job when market was at peak, you take like 6-8 months right now. And so it's a numbers game. Stay in the game long enough, and you'll get more offers. There's no like fancy strategy at all.
So I would add something to that, which is that go for areas where there is, like Soham said, much more demand than supply, right? In those areas, it is because of the demand supply gap. If you can showcase skills, or you can invest in skills or build skills, and I'll give AI as one example. There might be other examples. AI, ML, being AI enabled, those skills are very highly in demand. So it's likely that you could negotiate better in areas where there is much more demand than supply. Okay. Okay, there's a very funny question that says, am I the only one who can see the presenter's forehead? I'm not sure if that's a comment on my forehead or something else. I'll skip that. The next question is, what is the AI enabled term? What does that mean? Okay, so we have been talking to folks. We've been doing our own work to try and figure out how to help people move and up level. And one of the things we've realized is that software itself is getting rewritten, right? And it is becoming software 2.0. In that paradigm, even if you stay in your current swim lane, let's say back end, front end, whatever, right? Because of the ML wave that is coming, being conversant with how to use and build on top of those models is crucial, even for people who don't want to move into ML, right? And that's what we mean by AI enabled. As a backend engineer, how can you work in backend, but still be conversant and be able to leverage? That's probably the right word, right? Leverage AI in your day-to-day work or work in those teams, right? So you don't actually move into machine learning or you don't actually move into data science, but you stay in your current domain and you're enabled to work in those teams, those pods, and you know how to leverage everything that's coming out of those magic boxes. Ananya says, Ryan, what about entry-level roles in data science? Ananya, I'm not quite sure what you mean by, like, what about them? Maybe if you can provide some more context, you may be able to answer that question a little better. Geographically speaking, where are the rebounds expected? See, the rebound seems to be starting with large tech. Okay, companies that are well placed to take advantage of data. And so, I mean, while I don't have any data that suggests one location versus another, if I were to take an educated guess, it would be in regions where there are the large tech players, right? Hubs where there is a lot of AI activity. There is the LinkedIn workforce report that has just come out. I think a month ago, or maybe a couple of months ago, but very recent. That report has data on where geographically they are seeing green shoots. Now, I have scanned that report. I don't remember off the top of my head where exactly those locations are, but that's a good source to go and look at, right? If you are looking to understand where geographically there are rebounds, right? I don't have first-party data, or I don't have first-hand knowledge of where this is the case. Okay.
I mean, safe bet is California. About 50% of companies are in California, tech companies. So just like, don't buy into the media nonsense of people leaving California, and so it's not going to be any better or any of that. Still, more than 50% of companies are HQ'd in California. So that COVID has benefited Texas, Washington, and New York as well. Not DC, but Washington State. So those are some other places, but even combined, they are not even half of California as such. So safe bet, California.
I think there is some interesting data which points to the fact that people are coming back to California, right? To Soham's point, especially with this latest wave. Okay, Venkat says, what is the level of focus for the math required for AI and ML engineering roles? It has been a while since I've had a math course, so definitely need a refresher and maybe an extra focus if I'm lagging in those areas. So Venkat, just come attend one of our webinars. We talk about the what you need in detail. Just at a very high level, we have two separate offerings in the AI and ML area. One is called Switch Up, and the other is Enable Up. Switch Up is where you switch into machine learning. So that's the course that is about 9 months or so, 9 months plus, where you become a full-fledged machine learning engineer. If you want to become a full-fledged machine learning engineer, there is math involved, right? And it's not trivial math, right? You need to be conversant with things like stats, linear algebra, regression, calculus, probability. We do teach all of that. We start the course with foundations of Python, SQL databases, etc. Then we move into foundation elements of mathematics, and then we move into ML. So we cover all the foundation elements of mathematics. That being said, we go through it at a I'd say even pace. It's not necessarily fast or slow, but it's at a fair pace. So if you are interested, then those are areas that you could spend time on either before you come into the course, or you make sure that during those weeks you're able to put in the effort. ML does require math. You can't get around it. And so it's just good to get comfortable with that. Okay. Now, the alternative is to not move into core ML roles, to stay in your domain and get AI enabled. That does not require any, unique proficiency in math. But remember, there you are not moving into ML. You're taking advantage of the paradigm, but you're staying in your own domain, right? So you need to have a basic understanding of ML foundations, how it works. But much more importantly, you need to understand how you can use AI in your own role. So we call those enable up courses. Those are much shorter, 6 to 8 weeks. And there the math component is not very heavy. Okay. Shawan Morgan says, hey, Ryan, do you have links for episodes 1, 2, 3 of Upsides? You'll find them on YouTube, right? We are going to put the first 3, 4 on the website as well, on the Interview Kickstart website. We'll probably get those done sometime this week. I know some of our team is listening, and so this is a cue, guys, to get this all up on our website, maybe under resources. But you just search on YouTube, right? We are uploading all of them on YouTube, and so you should find them there. KP Patel says, when will the job market experience a surge again? I mean, your guess is as good as mine. We don't know when it's going to peak. And I assume you mean secularly across the board. My sense is that it has some link with the interest rate regime. But that's not really a very relevant, from an individual perspective, that's less helpful, right? It's a marketplace. So in every marketplace and at every point of time, there are areas of boom and areas of trough. Even during COVID, which clearly saw a massive surge, right? There were huge areas of the marketplace that were hit very badly, like hospitality, right? The main street was hit very badly, right? And so it's all narrative driven. Even in so-called boom markets, there are areas that are hit significantly. Even in bad markets, there are areas that do particularly well, right? So I think the general market surge is not really a useful paradigm to have. It's more important to understand what is hot, where is there opportunity, what's happening now, and where is there secular opportunity for the next few years, right? You should look at the next 5-10 years and see where is that opportunity. And clearly right now, it looks like the hottest opportunity is in AI, ML, and AI enabled. That seems to be the trend for that is playing out for the next many years. Okay. Okay, so this is I think you have strong views on this, so you might be well placed to answer this question. This says, I'm a F1 student in my final semester, graduating this December. When can I expect entry-level roles from top companies to open? What is the best thing that I can do right now?
Best thing at any time is to continue to prepare for interviews. That is your only way to find a job and have any sort of job security, stability. That is the only definition of stability ever. So just add, when is it going to happen? Like Ryan discussed in the first 30 minutes of this, all signs are pointing that it should. We are very close to the bottom. So 24 is you should be looking forward to, and between now and 24, just continue to prepare for interviews. And yeah.
So this is a very interestingly worded question. For those juicy ML positions, would it really be a significant difference to have a 3-month course in the area? No, so the juicy ML positions, if you're talking about becoming a machine learning engineer and taking advantage of core machine learning, it's very difficult to see how somebody would do it in 3 months, right? Those clearly take about 9 months to a year. And so if you want to go all in on ML, it will take 9 months to a year. If you don't want to go all in on ML, and there could be multiple reasons for that. Either you could thoroughly enjoy the current domain that you're in, or maybe you don't want to take on the challenge of the math involved, or maybe you just don't have the time right now. And so you can't do a 9-month course, but you want to participate in this juggernaut. Then your next best bet is to stay in your domain and get AI enabled to take advantage of the second order benefits, right? And that is where the 3 months course works, right? 6 weeks to 8 weeks courses work. There are really 3 options. Your best bet, move into machine learning. Disproportionate benefits, 9 to 12 months time effort. Your next best bet, if you don't want to move, get AI enabled so you can participate, get the secondary benefits. The third thing you can do is do nothing. And that's when you're really playing with fire, right? Because software is getting rewritten. So in our view, doing nothing is not a worthy option, right? Could you please show us your AI enabled and your switch up training programs and their costs? Guys, this session is really about information dissemination. Please reach out to our program advisors, attend one of our webinars. It's super easy. Just go sign up, and we can take you through what those programs are, what the curriculum is, what the costs are as well. I don't want this is not aimed at being a pitch about Interview Kickstart. I think our track record speaks for itself. This is more about sharing information that can help you, or like we say, insights to move up in your career. Okay. Some question for you. How do software engineering manager roles rebound with new technology, with AI, ML? How do these technologies help software engineering managers to get roles and to get new jobs, right? So maybe let me reframe the question, right? This is a question from Vikas. I think the question is, if I'm a software engineering manager, how can I take advantage of what's going on in AI and ML to get new roles?
I mean, again, nothing.
As an engineering manager.
Yeah, nothing really special. I mean, in our view, engineering manager is really only worth it if they can perform as a senior engineer level, especially going in a new technology. So learn ML at least a senior engineer level. If your team is a core ML team, which is doing something in tuning models and building models, you should be very well versed with what ML is, and so that's when you get respect of your team. If your team is just using some models and making API calls, then that. So whichever one of the two, but learn as much as an engineer in your team would know, so that you can have fruitful conversations with them, get respect, they start to listen to you. Otherwise, within a few months, you'll diverge from the team, and it won't be very good for your career overall. But otherwise, just ML is like one more new thing, right? So the way world moved to mobile, the way world moved to cloud, how did that affect? So there were teams for that, and they needed managers for that. You just have to know that tech.
So just to add to that, I think Swam's already covered it, but I just want to make it abundantly clear. If you want to lead ML teams, then you should know ML, right? Enough to be dangerous and enough to have those conversations. So if you are looking to take advantage of ML and lead ML teams, then you would need to invest, whether it is with us or with anybody else, and build some proficiency in ML. Okay, that is important. it is difficult to see that you can go and lead ML teams without knowing anything in ML. There are a bunch of other questions, guys, that are about our courses. I'm not going to take those because my answer is going to be the same, and we're also bang on time. Let me take maybe the last two questions, and I'll just read them and quickly take them. Miley says, most of the entry-level ML data science positions I'm seeing require 2 years of professional experience. What companies are best for somebody who's relatively new to the field and has around 1.5 years of experience? Miley, yes, while traditionally that was the case that you required ML experience, see right now what's happening is you're seeing an explosion in the demand for ML engineers. And so companies are just simply not in a position to demand experience because there aren't experienced folks out there to fit the roles. And so your best bet is to build project experience, get relevant experience, do interesting projects, and then just look at a whole host of companies, right? So I don't think there is like one company or the other that is specifically well placed. Just out of curiosity, if you are looking for more data and interesting things to read, the Wall Street Journal last week or the week before last published an article, and I think it's titled "The 900,000 Netflix Job." That article talks extensively about what is happening, what is the issues that companies are facing, and why is there so much opportunity for ML, and how are companies actually, they flipped the question, how are companies working to solve the shortfall that they have in ML engineers? The article goes on to say that the shortfall is so significant that most companies are now actively thinking about just retraining their existing engineers, right? Or not, well, I wouldn't say most, and many companies are being forced to do that. Jennifer Tran has a question. Let me wrap up with that. With AI, would you say it's more advantageous in the short term to be in tech or management? What would you say for the long run? I assume you mean an IC or in management. There is nothing different in what we would say in general, which is that it's a personal choice, right? Remember, being a manager is also about managing people's careers, doing check-ins, doing reviews with folks, managing people. It's a lot more than just day-to-day managing of delivery, right? And so you should be comfortable with that. You should enjoy that. In tech in particular, you can move across management and ICs for a couple of levels. So if that's what you want to explore, feel free. Not everybody needs to be a manager. Not everybody should be a manager. And the beauty in tech is even if you remain as an IC, you can get paid as well as managers all the way up to the top, right? With that, folks, thank you very much for your time today. I hope you enjoyed today's session. I hope it was fruitful for those of you who joined online, LinkedIn, YouTube. Thank you for being here. And we will put these up on the Interview Kickstart website. If you are looking to move into AI, ML, look us up. If you're looking to move to a better company, look us up. And we'll be back next week, same time with another session. Thank you very much, guys. Enjoy the rest of your evening. Bye-bye. Thank you, Sam. See you.
Bye.